Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews. This is where we bring in a minister or a chief executive or someone who's got something interesting to say about economy, business, interest rates. And we're going a bit off the beaten path today. Today we welcome Rod Drury, who's the chief executive of Xero, into interest.co.nz. Welcome, Rod.
Hey, Bernard.
Rod is one of New Zealand's leading tech entrepreneurs and obviously has launched Xero in the last couple of years to great success. But I started talking to Rod a couple of days ago about the trade sale of a company called Mcom, which is a financial software company based in Auckland, growing very strongly, and it's just been sold to a company in the States called Fiserv, a much bigger company. And it got me thinking about how New Zealand grows tech companies, big tech companies, and keeps control of them, if that's what we want to do. Rod, how do we grow really big tech companies when it seems we often sell the small ones before they get big?
Yeah, the reason that I started talking about this was because it's very tempting to think that trade sales are bad, but I don't see it that way. I see that they're a natural step in the way that you do grow these businesses. So if you look back at New Zealand, we've had quite a bit of success in doing in the R&D by acquisition model, and this is where we've taken some great enterprise software companies and we've built them up to a certain point and then we've sold them. The really interesting thing is what happens after that. Do the founders go back and do they reinvest and do all of those things? But if you think about it at a personal level, quite often these businesses that get up to a trade sale, the founder's been in them for often 5 to 10 years. You know, they've been really on the bones of their ass for all of that time. The bank and their mortgage has been funding the business. So there's a whole lot of reasons why a entrepreneur kind of needs to sort of drive things towards a trade sale. But also you get to a point in growth, and we had this with our aftermail business, where once you get to a certain point, you have to go and raise some more money to really grow. And that's a natural inflection point. Does the entrepreneur sign up for the next 5 or 10 years, and how much of the company do they own at that point? So what I've seen is, for your first few deals, for your first few businesses, you don't really have the right to smack it out of the park. And what you gain with your first few businesses are your experience, your networks. You can sort of prove to people that if you take money, you can give them back more money, and all of those things. So I find trade sales are actually are a natural part in the life cycle. So people gain that experience. They've usually taken some investor money, some angel money. They can pay that back, and then hopefully the entrepreneur can have a bit of a break and then come back all fired up with more of their own capital. And when you have more of your own capital, you can drive the next business and have much more control.
Because when I look at it on the face of it, let's say Facebook or Google, those guys didn't build their business and sell it off in a trade sale. They kept it and grew it up. Playing devil's advocate, why can't we do the same here? Is there a failure in our capital markets?
Well, it's really all about scale. So it's always tempting to look at the Facebooks and all those things, but they really are the exception to the rule. So trade me the Facebooks. There are a few examples where people do smack it out of the park, but a much more repeatable model is thinking about entrepreneurship in a series of small steps. And so with each business, I kind of think that it's the entrepreneur is the one that creates the value moving forward, and the businesses are their stepping stones to do that. So like in our case, our first sort of real business was Glazier Systems, a services-based software company. We sold that in the late 90s, and from that there's probably been about sort of 15 to 20 businesses that have grown from that. So we had some great experience, and then that fragments, and there's a whole lot of other businesses, a whole lot of new jobs came out of that Glazier experience that led to aftermail. And with aftermail in the enterprise software space, we built up some great technology, but we didn't have the people in New Zealand. Once we got up to about 300 grand per month in revs, we actually, and you know that you don't get sort of paid, from about 2 months after an install. So once we got up to about $300,000, we actually needed about 900 grand just to fund the cash flow of the business. So then you start thinking about angel investment, and then we sort of started to get to a point where we had to build a global sales force, and that's really expensive and all of those things. So when we looked around, we actually didn't think it was sustainable building an enterprise software business funded out of New Zealand. But what we did manage to do was to take that to a trade sale quite early. We did that within 2 years, and we got 15 million in cash and another 15 million US in cash and another 20 million of potential earnout that we could have earned over the next few years. So what happened with that then, once we had that, we had such great experience, we were able to go all in with that money into Xero. And we could set the business from that point of view to be a long-term business because we had sort of control of it right from the start. So I really think entrepreneurship in its most repeatable form is a series of baby steps, and trade sales are a really good, a really good milestone along that journey.
One thing that people like New Zealand Institute have said is that New Zealand doesn't have really global scale companies. Apart from perhaps Fonterra, we really don't have one that is a leader in its field globally. And that if New Zealand's going to grow, really grow, it needs the likes of a Nokia or a Microsoft or something like that to really go. Should or New Zealand be aiming for something like that, or are we just too small?
Well, I think we can now because technology's changed. So, clearly in the primary sector with the Fonterras, we have some skills and some natural competitive advantages there. But in this kind of the technology and software space, it's actually really hard because we haven't traditionally had the resources to build global networks of sales teams and all of those things. What's changed now is the internet. So after the experience of TradeMe, we saw what we could do when we have the servers run the business, and we're kind of taking that to the next level with Xero, where we can, we have a few smart people in Wellington and sales teams all around the world now, but selling in a very scalable way. So we write software, we put it up into the US, and anybody around the world can see that. So I think the internet is providing us the opportunity now to provide, to actually build long-term, sustainable, New Zealand-owned businesses which actually last. And again, going back to the sort of last generation, the enterprise software space, we're really fighting against. We couldn't find 100 consultants to parachute all around the world, but now we can actually, if the servers are doing the work, it's really just our brains. So there's such a great opportunity now to start building the Nokias and those sort of companies.
Do we have the good enough connections though into that cloud in the rest of the world? Given we've got one major line out to the rest of the world, and our broadband networks are quite weak.
Yeah, I mean, it'd be much better if we could solve the broadband problem and put us on the same network as the US and other parts of the world. I mean, obviously we're trying to fix that with Pacific Fibre. But what the connections we do have is, as New Zealanders, I find that when I travel, we can actually connect to some of the most senior people in the world, and we do have all of the heads of technology have a relationship with New Zealand at some level. Seeing the planes that are coming in and landing down here, the Google guys are here, the Microsoft guys are here, the head of SAP's got a place down here. So we are starting to connect with those people now. So from a Xero perspective, we just connected with Peter Thiel, first outside investor in Facebook. I was up with him in San Francisco last week. They're really helping us with our business and growing. So at a personal connections level, what's happening now is we're starting to get a bit of profile on the world stage, and that really is the most important thing. It can be made a whole lot better with getting our infrastructure better, and that's a whole other conversation. But I think we really can grow some smart businesses now from New Zealand, and we are.
Rod Drury, the CEO of Xero there. In another of our double shot interviews, I'm Bernard Hickey from interest.co.nz.